Welcome, everyone. Welcome to the Financial 15, a show where we try to provide some financial knowledge so you can use it in your financial world to improve things. We try to do all of that in 15 minutes or less. Kevin, what are we talking about today?
Today, we're going to talk about RSPs and TFSAs. We're going to talk about the comparisons between the two, the differences between them, when you should be using an RSP, how it's going to affect you, everything along those lines. So we want to make sure that we let everybody know what the important points are for both of them, so that going forward, you know which or where you want to put your money, or if you want to split it into both places.
A very common question. How do you maximize them? Which one do you use first if you only have so much capital? We're going to get through all of that today, but a reminder, you can always visit us on the website, beckeror.com. If you have other questions, other topics you want us to tackle, feel free to visit the website. You can also like this YouTube video, share it with your friends, and we got other YouTube videos. You can check those out as well. So let's get into it here. Kevin, we got to start off with the basics. So the difference between an RSP and a TFSA. What do you think some of the basics are for the two accounts?
Well, yeah, basically, I mean, even though they are both listed as technically a registered account, an RSP is basically done with earned income, whereas a TFSA has a specific amount that you can put in each year. So if you've earned income, you're allowed either 18% of your year's income up to a maximum of $27,230, whichever one is lower. And in the TFSA portion, you're allowed $6,000 maximum. That, of course, that number can increase depending on what the indexing for the Canadian index fund is going forward. So that's part of the differences between the two of them. What are some of the other ones we have, Clint?
Yeah, you got lots of them there, and we won't go through each one in detail because that could be a whole video just going through the details of RSP versus TFSA. One key one there is the withdrawals. An RSP, you put the money in, you get an automatic tax deduction, which is fantastic. When you take the money out, it's fully taxable. It's treated as income. Not the case with the TFSA. TFSA far more flexible. You can put the money in, it grows tax deferred, and you can take it out at any time without tax deduction. And that is an important difference, how you handle those withdrawals. What about for the type of investments, Kevin? What can you put into these accounts?
The investments can be basically, it's a wide selection you've got. You can have mutual funds, bonds, stocks, ETFs, whatever the case may be in that. Whatever you can put basically in an RSP, you can put into a TFSA. That's one important point very much to clarify, because the majority of people that you come across truly believe at times that a tax-free savings account is exactly that. Just a normal bank account that has savings interest. We must clarify that that is not the case. You can do that if you wish, but you have a wide variety of options that I think give you more option to try and get that thing to grow going forward.
Absolutely. It's misnamed, not really a tax-free savings account, tax-free investment account. One last point here is the conversion. An RSP, you are forced to convert it to a RIF. That happens at the end of the calendar year in which you turn 71. And then next year, when you're 72, the government forced you to start taking some money out. So there is a forced conversion with an RSP, not the case with the TFSA. You can hold that sucker as long as you'd like. You can hold it until you're 96, if that is the case. So TFSA does not have that forced conversion. So with that aside, let's jump into some of those key questions. And I think part of it, in order to answer them, we have to get an understanding of some of the individual tax brackets. So if someone came to you, Kevin, and said, hey, I make $50,000 a year, I'm thinking about an RSP, what would you tell them?
Well, basically, there's a variety of different options you have there, but we usually use a rule of thumb around that 72 mark, but we'll get into that in a minute. Basically, what you want to try and do is figure out how much tax you're going to eliminate if you're going to use the RSP over the TFSA. So if we were earning $50,000 a year, basically it puts us in a marginal tax bracket of around 33%. If we wanted to lower that to 27, we could contribute money to get us underneath that 48,535 range and deal with it that way. But if that's sort of a small percentage for where the amount that you're going to save is, then you might be looking at putting more of that money into a TFSA going forward. But you're right. I mean, the tax brackets are very important. The more money you earn, the better off you are putting a contribution into an RSP to lower your income so that you pay less taxes. The big factor to always remember is that with dealing with an RSP, you're investing in the future while reducing your tax liability today. And that's a big point to know going forward. How about you, Clint? Where would you say those levels of cutoff are?
I would agree. A quick note here, we're looking at the individual tax rates for Manitoba. So this is a graph that combines the Manitoba provincial income tax rate with the federal tax rate. So if you live in Ontario or Alberta or a different province, the rates would be a little different. However, the analogy in the thinking would still apply. And I would agree, we had to look at the short term versus the long term. The short term with the RSP, get the savings today, but when you take that money out, it is going to be treated as income. So ideally, you only want to be putting the money in when you're in a high tax bracket, get lots of savings today. And then the concept is in retirement, you're going to lower tax bracket and you don't pay quite as much on the other end. Now, in terms of that level, I agree with you that $72,000 bracket. If you're above that, I think an RSP makes some sense because you get quite a bit savings up front with the RSP. If you're below that, in my opinion, the TFSA is likely the better option. You'll get more bang for your dollar putting in a TFSA because you're not getting that much of an upfront deduction for the RSP. So I like to use that $72,000 as a rule of thumb. And then the other question is, so we put some money in, how much do you put into the RSP? What kind of deduction would you want to make, Kevin?
Well, it all depends on how much you want to lower it down. So, I mean, if you're making $80,000 a year, you're going to need to put in at least $8,000 to bring it down below that 72 so that you're going to get back into that marginal tax bracket of around 33.25 as opposed to the 37.90. You always want to try to put enough money into the RSP to lower you at least one tax bracket. If you can do more, that's great. If you can't, at least one tax bracket is what we're looking at. Because basically, if you were in the highest tax bracket, as we're showing at 214, by putting money in to lower you below that, you're saving at a 50% tax rate, which is really half of the money that you're going to be putting in there anyway. So anytime that you can lower yourself by one tax bracket, that's what it is. So the numbers will vary based on what that number is.
That's a good guide. That's a very good guide. If you lower yourself by one tax bracket, you're probably putting enough into an RSP. Of course, there's exceptions. Let's say you sell a property one year and your income spikes for that particular year. Well, maybe for that particular year, you'll add a little more to the RSP to offset that one-time tax hit. But apart from situations like that, if you have a higher income, an RSP makes sense, and you want to put enough in to ideally knock yourself down one tax bracket. Those are some good guides to keep in mind. So apart from those situations, the TFSA, in my view, is a bit of the better option there. What were you about to say, Kevin?
I was just going to say, and as of note, I mean, we're not saying that you cannot contribute to an RSP after a certain limit. I mean, if you make $35,000 a year, by all means, you will get a tax break. It will help you out. We're just giving you guidelines forward as to what we think are the best options for how to put that money to use.
Absolutely, because it's a tough question. You do the RSP, you do the TFSA. There's not as if there's one answer that's going to fit for everybody. We're trying to provide some guides to make what we think would be a more informed decision, a better decision. And as a recap, here's what some of those guys would look like. If you had enough money, ideally, you just do both. Put money in the RSP, put money in the TFSA. If that's not the case, you can follow some of the guidelines we just mentioned, which would be over 72,000, RSP makes sense. Below that, TFSA probably your better option, and adding enough in the RSP to try to knock yourself down one tax bracket. As a rough guide, I think those are some helpful takeaways.
Yeah, I agree with you completely. And again, we've done just the basics on what the RSP TFSA conversion is. There are a lot more differences and similarities between the two, but if we go into that, we could spend another 15 minutes describing just what those are in each plate. So let's use these as our main goal and focus this way to try and do things. If you have questions or anything else, by all means, feel free to contact us. We can definitely expand on any of these ideas.
Absolutely, absolutely. It is an individual case here, some rough guides we went through today, but if you have more questions, visit the website. Also, please be sure to like and share this video. We're more than happy to help out. Any last comments, Kevin?
Yeah, I mean, basically, I think that now it's coming close to that time in January, February, I got to start thinking about a new TFSA and an RSP contribution for myself. So other than that, I think that we've done a very good job for this. The timing is perfect, and let's hope that everybody can share this with everybody you know.
Absolutely. So until the next video, which we're hoping to see you real soon, be sure to stay safe and take care.